Welcome to TheoTrade. This is Don Kaufman. Here we are. It is November 15th, 2017. Let's start tonight's TheoTrade video by kind of giving you a little bit of an orientation of some of the trade action that has already ensued this week. Starting with, the expected move on the week. Now, for those of you that may not remember this, the expected move, and that's indicated by the lines, of course, that I'm drawing here on the screen. That expected move this week was, well, substantially greater than it has been in any other recent weeks. We were looking for a move here. Remember, it's plus or minus approximately $31. So you're looking for a $31 move higher or a $31 move lower. Now, how did that compare to the previous week? Well, the previous week we were looking for like this $21 move higher or lower. Okay, so you can see this pretty drastic expansion in volatility, okay, in the here and now. Again, giving yourself like a little bit of an orientation of where we are. We started the week dead on 25.82. That's in the SPX. We've sold off a little bit, but nothing substantial. I mean, this is like the slow move to the downside, if you will. We're only, again, 10, 14 points lower here on the S&P. However, as I just mentioned a moment ago, there's been a fairly drastic expansion in the implied volatility. And I want to be very, very distinct about this because, well, it matters, and it matters huge for what I'm about to show you. Implied volatility, is what the options market is indicating risk to be. But the aspect of implied volatility that's so incredibly important that everybody kind of misses, the implied volatility, it's kind of like trying to handicap risk out into the future. They're trying to say, like, what's the risk going to be here? What's the risk going to be out here? And the further you go out in time, kind of the more uncertainty, of course, there's going to be. So on a week-to-week basis, when we look at this and it says, listen, there's supposed to be a $31 move coming, you better listen, right? Because, again, the expansion of volatility from last week to this week, it was a 30% expansion. Again, the previous week, we're looking for like a $20 move. This week, we're looking for a $30 move. It's notable. Now, here's the interesting part with that. And you guys can kind of follow along and play the TheoTrade at home game over here. Come up here to studies, all right, and go into add study. And under volatility studies, now I'm not going to be pulling up implied volatility. I already know what the implied volatility is. I look at the option chain. I'm actually going to pull up the historical volatility. Now, for those of you that are unaware, what is historical volatility? It's the annualized standard deviation of past stock price movement. Now, I'm going to close up this left side bar, We'll just close up the left side bar for a moment. Now, when you pull up the historical volatility, it defaults, to kind of like 20 days in there, kind of 20 days, which is a little bit longer duration because, it's longer duration than I would like because my expected moves are only like 5 days into the future. So one interesting aspect I want to show you over here, and you can see what the historical volatility is even over the last 20 days, all right? Over the last 20 days, it's about, and that's equivalent to about 5.1%. Again, this stuff is in percentage terms. So the 20-day vol is still sitting, at about 5.1%. But if you go look out into the options chain is actually almost double the 5.1%. So there's a really interesting phenomenon going right now. And again, here we are just about 5 days out in the future. Now, granted, this comes into next week, but just look at this. Even over the next 2 days, the vol is up almost to 12%. We're still looking at a $20 expected move, I am telling you, the implied volatility is screaming at you right now. Get ready for a big move. However, the actual move isn't doing anything. Now, check this out. We're going to go over here. We're going to edit, all right? And we're going to knock this down, And you can see like what the length happens to be, but we're going to knock this down to just the last 5 days to give us, again, kind of a backward look, right? And that's exactly what it is. It happens to be kind of backward looking. We're going to hit apply, hit OK. Now, again, we set this to 5. And as you start to look at this, you're like, okay, so where are you going with this, Don? I'm going with this the actual movement in the market, it's negligible. Okay. And again, we're sitting here and we're like, oh, the volatility is all pumped up. Yes. But the actual movement, again, I call it actual movement because it's historical volatility, right now is sitting somewhere near 3.6%. Okay. Now, time out for a second. If you're playing this game of chicken, okay, you're playing this game of chicken over here. Implied volatility says, get ready for a move. Actual movement says, I'm not going to move. Okay. At least for my money, I'm actually going to believe the implied volatility. And I'll tell you why I'm going to believe the implied volatility. I think we're getting ready to move. Okay. And I don't know exactly, you're like, oh, which direction over here. Okay. The one point that I'll make though, with the actual or the historical vol, it's at almost absolute lows. And I don't think that's going to last anymore. I think we're going to see a big pickup right here in the next, possibly the next 2 trading sessions over here of actual movement in the markets, because again, there's not much room for it to dissipate, and historical volatility is unlikely to stay flat given the fact there's so much anticipation for risk. And it's a really interesting thing again to look at, because I've seen very large divergences before between historical volatility and implied volatility. I want you to remember though, again, historical volatility is backward looking. It's saying the market right now just really isn't moving, but that's the market right now. However, again, the implied volatility is forward looking and it's screaming, look out, I'm going to move. And that's one thing I really want to leave you with, when we're looking at historic versus implied volatility. Now, let us move on a little bit. Another indication of risk coming into the marketplace, we always look at the volatility futures. Now, I'm going to clean up this chart for just a second. We're going to take a look at volatility futures. Now, for those of you that do not look at volatility futures on a day-to-day basis, the volatility contract rolled forward, okay? But here we are with the S&P's down 12 today, yet we've got volatility futures up, right, just shy of about 50 cents. This is a fairly large move. Now, if you take a look at volatility futures, right, this, doesn't exactly look right. But again, the contract rolled over. Nevertheless, volatility is taking off to the upside. Now, a lot of people ask, why are you using volatility futures? Why not use the VIX? Because the VIX itself, okay, isn't per se the tradable product. The volatility futures are the tradable product. So here we have implied volatility, okay? So we have elevated implied volatility specifically in the SPX and the really short duration options, okay? Again, you realize there's only 2 days left in these options, and I just can't stress this enough. There's 2 days left in these options. This is a Friday PM settlement. 2 days left in the options, and there's $20 plus of expected move. Okay. If you compare that to a week ago, and we'll do just that right now, you compare this literally to a week ago, come over here to the Analyze tab. This, right, in the Analyze tab right now, this is Think Back. And all Think Back is doing, it's allowing me to show you back in time over here. So if you look back to the beginning of the week, and that's, again, all I've done here in the calendar is I've gone back to this previous Saturday. I went back to November 11th. There was a $31 expected move. Okay. What did this look like the prior week? If we go back even to like November 4th, and you can pull data for that, the week on November 4th, the entire week was only expecting a $21 move, right? So an entire week was expecting a $21 move. Now we're looking at almost $21 move for 2 trading sessions. And again, I like to use that as kind of like orientation. So we just haven't seen, again, all this implied volatility is picked up. We're not seeing actual price movement. And that's a big one. Okay. Last in this volatility front, let's look over at the VVIX. The VVIX is the volatility of the volatility index. People, it's lit to the upside. There's nothing more to say. Okay. What this can be interpreted as, professional traders are mitigating their own risk. How are they mitigating risk? Okay. They're just basically offloading risk by buying volatility into the VIX itself. I mean, that's what the VVIX is. It's a measurement of volatility in the VIX product itself. Okay, moving forward, inside the last few days of trade, we've seen a couple of days where we've had what we term full-blown correlation. And what that amounts to, okay, coming in early in today's trading session, and we're not going to close this way, but into early in today's trading session, we had as many, okay, as 92 products trading to the downside in the advanced decline line. When you start getting 92 products trading to the downside, individual stocks, they don't matter. Nobody cares at that point. Arbitrage grips hold. That, okay, unto itself, right there, to me, is most indicative of volatility. Forget what anybody might say about markets over there. Forget about the VVIX. Forget about even the historical volatility. You don't see correlation, and we haven't seen full-blown correlation since prior to the presidential election. We've only seen a handful of days that we've seen this full-blown kind of correlation. And to me, that is, I think, the most marquee, the biggest differential. And it's happened now several trading sessions in a row. I almost kind of feel like we're testing the waters inside of the S&Ps here, testing a little bit lower at this point. All right, moving forward from there, what actually rallied markets back to the upside today, and this one is a absolute surprise and has a big question mark around it, was none other than the financials. The financials actually took back off to the upside in early trading session today, and it is what I should say rebounded the markets. If you take a look at the S&Ps, the S&Ps dropped like a rock here at the cash open, took back off to the upside. And again, most of that was predicated in the fact the financials had strength. And the reason I've got a big question mark behind this one, okay, to me, this trade is completely inexplicable. All right. Why is it inexplicable over here? Because the bonds are rallying today. The last time I looked, isn't bonds rallying? Okay. Mean the financials are supposed to trade a little bit down? Either way you want to look at this, and this is the big one over here. These bonds rallying like this, okay? Let's put the financials aside for a second. The bonds rallying, this is even more violent than the sell side activity we saw in the bonds, okay? At this point in time, the bonds, okay, we were talking about them just 2-3 trading sessions ago at absolute key levels, and that if the bonds broke lower, okay, this was big time for the marketplace. Instead, the bonds absolutely ripped to the upside. And now that the bonds are rallying, okay, and exploding to the upside, you got to ask yourself, the bonds are rallying, okay? The VVIX is to the upside. Implied volatility in the SPX is elevated. You've got some marquee underlyings here. Take a look at this. This is the monsters of tech. The monsters of tech is this conglomerate, Facebook, Apple, Microsoft, Google, Amazon. It's down over 1%. People, all of this, okay, amounts to ultimately one aspect, and that is the volatility beast is about to rear its ugly head. We're not seeing big movement inside of the SPX. We are very likely to see just that in the coming days. Look for markets to actually edge into and even possibly through their expected moves. It is extraordinarily rare that I ever would mention just that. Look for markets to possibly hit and even breach expected moves, okay, this Thursday and Friday. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.